Hi everyone, and welcome along. My name is Paul Bottrell. I'm the head of Actions to Wealth Online Trading Profit, and just come along this morning to welcome Gordon Scott, CMT, to our first of his live shows on our social media. This will be on Zoom. There are people who have registered and come straight into the webinar with him, and we're also streaming this through the Actions to Wealth YouTube and Actions to Wealth Facebook and Online Trading Profits Facebook and Actions to Wealth Twitter. It's a great pleasure to have someone established in the industry in the way that Gordon is. We've just moved into stocks, and having Gordon come along, who's well known for his involvement in particularly, I think, penny stocks and his work with Investopedia, as well as many other organisations. It's a great pleasure to have him with us, and I look forward to listening to him for the next hour and learning as much as I can, as you will. Gordon, without further ado, can I hand over to yourself? And I can see Jay's just come into the room as well.
Thanks very much, Paul. Excited to be here. Hope everybody enjoys this. Do want to check out and make sure that we've got the ability to see chats. Looks like we do. Hello to you soon. And yeah, great. So feel free to chat in any question you have. Let me just see if I can share my screen and we can kind of get started with a little bit of a presentation. I've got some charts to show you and some things that I think you'll
Gordon,
like.
Maya is our staff member who's in the room with you, and if there's any questions asked on YouTube or Facebook, she'll type them into the chat for you so you can see those as well.
Okay, excellent. All right, let me see if the screen sharing is going to work. And there we go. You should be seeing my screen now. Please chat if otherwise.
All good.
Okay, thanks, Paul. All right, so what we're going to start off with today is this. 4 segments to the program, and this will be kind of typical going forward on Mondays as we do this. We're going to look at a market preview from the U.S. perspective, the U.S. Open. We're going to look at what is leading up to the open of the market and how it's affecting it, how people in the U.S. waking up to their computer screens from the weekend have decided, well, here's what I'm seeing and here's what I need to respond to. And so we'll be looking at a market preview. We'll look at the key FX markets, the movement in them, those markets which tend to have a greater impact on the US indexes, specifically the NASDAQ 100 and the S&P 500. We'll look at which U.S. companies are reporting and how they're stacking up, light trading this early in the morning. But as we get closer to the open, that trading will pick up, and we'll want to pay attention to what the price action and the pre-market is telling us. I have the great pleasure to introduce to you a gentleman by the name of Jay Woods, and we will be joining him in here at about 1:45 the hour. And then at the top of the hour, we'll do some chart talk. We'll actually start looking at a few educational ideas for how anybody who's looking at the charts should be trying to think about them, especially for this particular week. And then down to the wire, we will look in the final 15 minutes how the price action is taking us right into the open of the U.S. markets and some things that we might be able to anticipate from a read on what's going on there. But let's begin this entire show and segment, if you wouldn't mind, just chatting in a little bit about your own level of experience. I don't want to get too technical, and I don't want to get too basic if the audience involved is at a particular area. So give me a feel for where you are. Have you ever traded U.S. stocks before? If you have, how long you've been doing it? What kind of U.S. stocks are you most interested in looking at? Any one of those 3 items would be useful for me to know, and I'd be grateful just to get a sense of, okay, excellent. So we're looking at first timers here, never traded stocks, first time, and newbie. Terrific. Okay, so that thank you so much. I don't want to just go on and on and on about deep details, knowing that however, I am going to share a few insider notes and tips that you probably have not heard before. Okay, now let me make sure of this here. So far, what I'm seeing, everybody that's chatted in, is saying that they don't have experience in the U.S. markets. If you're someone who has specific trading experience, then I'm going to want to know that. So be sure to chat that in. Okay, looks like Wayne's got cloud stocks and biotech, and Bob. Hey, Bob, glad to know you're here. Feel free to chime in anytime you like with something that you're seeing that we won't miss. For those who do not know, Bob is a specialist in low price stocks, one of my favorites, one of my favorite asset classes to work with. So, all right, here we go. Let's, if you don't mind, I'd like to introduce you to a few charts, the charts that I like to use on a Monday morning. And I have three particular platforms that I will be sharing from in this in these hour before the market opens. The first is Thinkorswim. There are a lot of good trading platforms out there. My two favorites are the Thinkorswim platform, which is TD Ameritrade, which is now Charles Schwab, all of that, and a TradeStation. I won't be showing any TradeStation charts today, but both of those platforms are a little advanced for people. And so if you feel a little overwhelmed by what you're seeing on the screen, just let it soak into you. you'll catch on, and more and more, the more you see it, the easier it gets. But I have another charting platform which I find to be a lot easier to handle for people brand new to it. It's still charts, but it's easier to pick up. It's a little cleaner, and that's the Trading View platform. And I really enjoy the Trading View platform in part because I can connect it right to my TradeStation account. I have accounts in both places because I like to do different things in different accounts. It kind of helps me mentally, visually say, oh, I'm trading this way today. I want to be on this platform. And now I'm doing this. I'm going to do it over here. It's really the same price, the same kind of thing, but I'm able to just keep my mindset strategically dialed into what I'm trying to work with. So I will be showing Trading View charts and Thinkorswim charts primarily. So that's that. Well, let's dive into it then. I'm going to start with the FX markets. I'm going to bring up first, I'm going to come back to this one, the Aussie yen, and tell you why it's so important. But I'm going to start with the Euro USD. Now, the Euro USD has less specific correlation to the US markets than other pairs, the Aussie yen in particular, but it is highly influential nonetheless. It is the case that everybody in the major trading houses, the large investment houses, all the professional money managers, they are aware of what the euro is, where it is, and what it's doing. Okay, let me see if I can get this chart over there. You should be able to see my euro screen now, right? Okay, terrific. We got somebody that has a specific interest in a lot of stocks. Oh, good to know. I'll be happy to pull those up and look at them on occasion. I'll have to refer back to them. And years of experience with Asian stocks in Hong Kong, Singapore. Wonderful. Terrific. I will want to get your input back. My guest next week, hopefully, if schedule permits, will have that similar experience as well. So we'll be able to talk about that in depth. But for today, we're looking at the chart here, and the euro has this really prominent and interesting channel that it's been carving out here over the past 24 trading hours, and notably has broken from that pattern to the upside, a small little flag pattern, kind of like right here. Now, I got to tell you, I look at patterns. I look at these things. I'm not a big pattern trader. I did a lot of research into pattern trading and found that pattern trading is not particularly predictive. That is to say, if you have an ascending triangle or a flag pattern or something. It does not predict that the stock will do this statistically, very little edge, with the exception of a flag pattern. For some strange reason, the flag pattern has a small edge. And so it's kind of worth paying attention to. But what is important about pattern trading is that it tells you kind of what the market is thinking almost. Here's what I mean by that. If I can imagine that any kind of pattern represents a price action period where the bounds of supply and demand are set, then I know that market participants are valuing this particular instrument within this range. The top of the range they think is expensive, the bottom of the range they think is cheap. So if they think that, it's good information for me to know. And how do they respond when they think the market is cheap? Do they buy it up? Yes, they do. Well, then that's what creates the pattern, right? Now, the big thing about patterns is when they end. And here on this particular chart, what I'm noticing is that the pattern has ended recently. And so, as I said, these are 5-minute charts. I'm just going to zoom in on them. And over the weekend, there was very little gap in the Euro USD. And that's important because it means there wasn't anything earth shattering in that 24-hour period where it was closed and where trading was closed. And people aren't expecting, and worldwide investors aren't expecting earth shattering news going forward. That's just the general. If you don't see much of a gap, then they're not particularly worried about something. If they're worried, oh, this week or this day or this next 24 hours is going to do something, then you see some kind of a sizable gap. Most weeks there isn't, as most of you know if you're forex traders. And so that's business as usual. A little bit of a gap to the upside though. Just a hint. Somebody felt like I have got to get my money into euros and out of US dollars. Enough so that it moved that currency up over the weekend. Just a hint, right? So what does that say? Well, just a hint. People want to risk a little bit more. US dollars tend to be, I want to keep my money safe. And anything else tends to be, I'm willing to give it a try. And so that's kind of the way we can think about that, especially when it refers to the US markets. Okay. So the pattern kept going into this long back and forth, and then it broke out, see, this is so interesting that patterns do this. What was resistance, what should have been expensive, then once it broke and came back and retested, was now support. So that kind of confirms the fact that, hey, this break was a meaningful break. This line was a meaningful line. Somehow somebody's spreadsheet, some collection of analysts all felt like this declining general price for the euro was in place. But you see that little jump, that little gap for the weekend, and a breakout to the upside confirmed together. People are still hungry. They want to put their money to work. And so it comes up, finds some support. Now it's going higher. We found the flag pattern and then a break from the flag pattern. We're breaking out of that as we speak. So this is a very bullish setup just in terms of sentiment. If I'm reading the way the euro is from a perspective of US markets, I'm going to say to myself, do I want to be a buyer today? Are people on Wall Street going to be buyers in the US stock market? The euro is telling us that maybe so. Now, let's get a second opinion real quick here. And that second opinion is going to come from the Aussie yen. The Australian Japanese yen pair is neither the euro nor the US dollar. So I like to compare the two. I like what we have with 4 different currencies. And if you look statistically and you do a comparison between the Aussie yen and the NASDAQ 100, you find that there's about a 75% correlation on average if going back a 3-month look back period and then comparing that rolling over the years. It's surprising. It's not exactly stable. It goes up, it goes down. Sometimes it's anti-correlated, but mostly it's positively correlated. And so the euro was hinting, hey, this could be bullish for investors in general. What is the Aussie yen telling us? in the same period. Oh, so now this is a, yeah, we're still on the 5-minute chart. Good. And what am I looking at here? I've got this tight channel. Again, Aussie yen also took a jump over a gap over the weekend. Notable, right? So came up and but it's held into a range. Well, of course it would be holding into a range at this time. This is exactly what we'd expect. Why? Because it is the pre-market for the US, and the US is highly correlated. The Aussie yen and the US are highly correlated. Quickly, the reasons behind that are that the Aussie yen is the best proxy for the carry trade. So worldwide risk is really interested in just putting their money to work, and they like to do that with the interest rate differential between the two, the least paying worst paying currency and the best paying currency. So that's what we're looking at there. It has not broken out. So we've got a little bit of a tug and pull, and we're going to be able to go over the markets and see that. And we're going to get to do that with my buddy Jay Woods here. Jay, how's it going, man?
Hey, it's going really well. It's good to be here. This is kind of nice, charts and chats. I like the name, and I like that we have a lot of new investors that are tuning in, which is exciting.
Excellent. I am super excited to introduce Jay to you. I want to give you just a little bit of background, if I can, about Jay, and hopefully you'll be able to share my excitement. The thing that is wonderful about Jay is that he can actually talk to you and you can listen to him today. That has not been true up until just recently. Jay was a designated market maker for the New York Stock Exchange, working for a variety of companies, some of which you know by name, Goldman Sachs, others you may not know if you're new to the market, Spear Leads, Kellogg going way back, and IMC Global, and Jay can fill us in on the details of what other specific companies. But less important about the specific companies he's worked for, and more important about what he did, is that if you buy a stock on the New York Stock Exchange, and it just happened to be one of the stocks that Jay's given charge of, your order is going to route through his desk. And if you got a good fill, you can partially thank Jay for that. If you lost a ton of money in a few seconds, Jay can probably thank you for that. But what actually is going on here is that Jay is such a key player in the markets. He was in the U.S. markets for so long, or in the New York Stock Exchange floor for so long. I got to visit the floor many times as Jay's guest. I was very grateful for that. Thank you, Jay. And what I noticed while I was there is that things changed over the years. Jay went from having a whole staff of guys at his post to a whole flock of computers. And what's most important that most people are not going to know until this moment is that those computers were programmed in part using Jay's own personal trading algorithms by programmers at Goldman Sachs and other places. He and many of the other floor traders were all sort of modeled for the years. And correct me if I've got that wrong, Jay. But Jay, why don't you fill out a little bit of your background? Tell the folks what you did and what it was like over the years watching the changes.
Yeah, I was one of those crazy guys that you saw on TV. In fact, whenever it probably happened this morning, when the market's looking down in the United States, they go to traders and brokers with ugly and sad faces. And I was always the bad, ugly, sad face of the down day. But my job evolved over time. When I started on the New York Stock Exchange, it was an open outcry system, and people yelled and screamed, and it was fun. It was exciting. And as a market maker, my job was to make a market, meaning control the trading in specific stocks. So if anyone wanted to buy or sell, say IBM, they had to go to the one location where it traded, and they would come to my post, and I would get buyers and sellers to come together. I would make that market. If no one wanted to buy, I would fill the void and buy stock on the way down, sell stock on the way up, and trade those individual names all day long. So my true passion was for knowing 10 to 30 names inside and out. But then as technology evolved, it made things easier, where buyers and sellers didn't have to come in and negotiate every single trade. So the speed of markets increased dramatically. And now what we're seeing is, market makers are mostly electronic. So what we do as the human element, most importantly, are the most volatile times. So opens and closes, especially at the New York Stock Exchange, are always done in an auction style. If there is news in the stock, we'll take things down, we'll slow it down. I get to yell and scream at people, and we then open. So it's made it easier for people to get executions instantly, and it's also made it easier for people at home. They can get on their phone and they can now trade. This is something that is revolutionary, and it just keeps improving. So the fact that we have a whole bunch of new retail investors into the stock market and who are interested in learning more about charts, learning more about the process, to me is very exciting because it's always changing. And, I have 3 kids of my own, 3 teenagers, and one of them is, he loves Tesla and he's into the market. And it's been fun introducing him to things. But the one constant in my whole career are the charts. So what we look at as a technician, Gordon and I, are price patterns in stocks. Now, I may not know every stock inside and out and fundamentals. It is fascinating. I do believe if you're a new investor and you're a long-term investor, you buy what you know, you buy what you use, and you if you believe in that company, you buy it, you put it away, and you don't look at it every single second of the day. But as a trader, my excitement is looking for price momentum and gaps and changes in the market, and the way to do that is to visualize it with a chart. So when Gordon and I look at charts, we will see things that the normal person may not see, whether it's a candlestick that is different than the other candlesticks, whether it's a flag pattern, which is one of my favorites that Gordon showed earlier. These are the things that we look at as momentum traders. And depending on your time frame, which is very important, you'll make decisions. So, my background is, combat trading on the floor, and I've changed, I've adapted, I've grown over time, and I continue to do so. That's the one thing about being involved in the markets that's so much fun, is you don't know what the next day is going to bring. People can say, oh, you must have seen it all, and that's flattering. But the truth is, I've seen a lot, but I don't know what the next day is going to bring. And, the charts give you an advantage, give you an edge. And it also allows you to put in risk parameters, which is the most important thing for a young trader getting into the market. When you buy a stock, and someone told me this when I first started, 4 things can happen. Now, you guys want to buy a stock, you want it to go up, you want to make a lot of money, and we all want to get rich. That's fantastic. It doesn't happen that easily. We're seeing some extraordinary moves, and this is fun, this is exciting. But when you buy a stock, you better know what your risk factor is, meaning, all right, I put $200 into a stock, $2,000 into a stock. How much am I willing to lose? Whether it's a stock or an option. With an option, you can lose it all, and you can lose it all quickly. With the stock, which is my specialty, if a stock is trading in a certain range, $9 to $10, $9 to $10, and all of a sudden it breaks above that $10 range, all right, something has changed. There's now new momentum, new buyers coming in, and the sellers aren't as strong as they used to be. So what you want to do is you want to buy that change, buy that breakout, but know that if it doesn't maintain that momentum, that I want to stop myself out. I want to protect myself and limit my loss, because when you enter a trade, 4 things can happen. You make a little money, you can lose a little money. Those are normal. You can make a lot of money, which is what we all want to do, and you can lose a lot of money. And to be successful and to have longevity in this career, you just have to avoid one thing. Don't lose a lot of money, because one trade can blow up your entire day, portfolio, career, if this is what you do. So you always have to think, and this is a horrible way of living, what is the worst case scenario? And then let's hope for the best, and let's prepare ourselves to capitalize on that best scenario.
Thanks, Jay. Thank you. That beautiful summation. So one of the things I would love to get your insight in, you mentioned to me in a conversation recently that after you have left the floor, you've been trading at home and having a lot of fun doing it. And I heard you mention a couple things in our last conversation about checking out VWAP and just a few other indicators. Would you mind helping us construct a chart that is similar to the way that you would like to be looking at it when you go looking at stuff? I'm just, I'm going to use Trading View here, and I just wonder if you could kind of guide me to put on indicators that are, similar to whatever you think are important to look at.
I'll give you, if you don't mind, I'll give you something I'm looking at right now.
That'd be
the symbol
fabulous.
is SPR is the symbol. Now, as a technician, this is not what I advise people to do. I don't know anything about this company. I just look at charts, I get symbols, and then I, want to see what, as we show the chart, I'll show you why I'm looking at this. You want to look at it on a couple time frames. Now, as someone that's trading day to day, your time frames have changed. I'm looking for quick entry points and something that is breaking out to the upside from a nice basing pattern. So if we look at this stock, Spirit Aerosystems Holding, it's an industrial. So what do I know about industrials? I know the industrials, that sector is actually one of the strongest sectors. They're making new highs. I like to buy stocks that are in uptrends. So they're going from the bottom left of your screen to the top right, and that have a little momentum behind them. So in the case of this stock, Spirit, it broke out on Friday. I was watching it because I saw that it kept getting to a certain level, and I don't see the prices on it. It's around 42, 41.
Let me give you the prices. Sorry, I'm looking at percentage. There we go.
Yeah, 40. So about 41. Every time it got to 41, it came back in. And then it went a little lower the next time, but the low wasn't lower than the last low. So we have a higher low. This is a positive change. And it traded in this channel, and then all of a sudden something happened on Friday. It broke out of it. So as soon as it broke above that $41 price target, I had what was called a buy stop, meaning I want to buy this stock because all of a sudden it finally broke through that ceiling. Now, if
hang on right there. Let's I just thank you for bringing that up. I want to really focus attention on what you just said for everybody, because if you're new to the markets, new to the stock markets, you may not realize. Now, if you've done any trading in Forex, you might have heard of the phrase Jay just used: buy, stop. Okay. And what a lot of people are familiar with in the U.S. stock market is a limit order, a buy limit. And the limit is the idea that, hey, I'm going to buy it, but I don't want to buy anything higher than this. So I'm going to wait until the stock gets down to this price or lower, and then fine, I'm in at that point. That's the intuitive buy low, sell high. What's counterintuitive and exactly the opposite, and statistically better for you, is the buy stop order. It's saying, here's the level at which I'm interested in getting in, and I'm not interested if the price is below it. I don't even care that it's lower. I don't care that somebody else might think it's a good deal. I don't want in until I see it hit this barrier, because my anticipation is that it's going to go higher. Yes, I know it could go up and come right back down. I know that. However, what I know it's not going to do is going to hit me on the way down and keep collapsing, which are statistically the worst of your losses. Is when stocks are just a falling knife and you happen to try to grab it, you get all red and bloody. So what you want to do instead, most of the time, I like to do this myself, is what Jay said. You wait for a barrier, and as it crosses that barrier, you put yourself in. It's counterintuitive, but it has a slight statistical advantage and any advantage you want to get. So you said that you were looking for a buy stop order. Did you actually get in this trade on Friday?
I did, and I held it over the weekend. Now
good
we're
for
having
you. What price did you get in then?
$41.
Right there, 41. Okay, see, 41, so you picked it up on a buy stop order. Is that what I'm understanding?
Exactly. As soon as it traded above 41, I got in, and now you have to manage the risk. So I held it overnight. Overnight risk is the biggest risk you can take on as a day trader. And where I want to put my stop is to the downside, probably just a little below the low of Friday's trade. So around $39. I would probably go even more conservative and go a little lower, around $38.85, $38.75. If it was to trade back below that level, I want to sell out. I want to limit that loss, and I'll revisit the trade another time. It didn't work. But momentum is on my side. The risk reward factors are on my side, because now what I want to do is, let's look at this stock on a bigger time frame. So this is what it's done in the last 2-3 months. Where is it coming from? So if we go back a year, all of a sudden, okay, wait a second. This has a lot to reverse. All right. It could be at all-time highs, which would be fantastic. And you don't have a defined upside. You're just watching it go. Or in this case, where is this stock coming from over the longer term? Okay. We see during COVID, it took a dramatic decline. Well, now there isn't a lot of overhead supply, meaning there wasn't a lot of trading in this area between 60 and 40. So this stock has the potential to move up and fill that void in a relatively quick period of time. Now my target in a stock like this is to hold it for a couple days, couple weeks, as long as the trend keeps going up and it doesn't break below that price point. And I will start to sell stock on the way up. Now, will it work? I sure hope so. But I think that the odds are in my favor given the setup in the stock. So that's one of the things I look for when I'm doing the day trading and the swing trading. Now, I think the most important thing to do, and I saw someone in the chat say, a buy and hold investor. I am too. I buy and hold. I have Google, Coca-Cola, Disney, PayPal. These are like my Mount Rushmore of stocks. Some are very boring, Coca-Cola especially, but it pays a dividend. And I buy them and I put them away. And I buy a little into them over time. So I'm constantly buying those stocks a little bit every year and revisiting. Maybe every quarter we'll look and see if the trend is still up or not. But these are good quality names that I use, that I believe in, and that I think in the next 5 to 10 years are going to continue to lead. So long term, you buy the stocks you use, you love. If you love Tesla, if you use it, you believe in it, then by all means get in. It's a little too volatile for me. But from a day trade, swing trade, you want to look for setups. And I like stocks that are breaking out of consolidation patterns like we see here, stocks that are making new highs. But once I get into those stocks, make sure you know the downside risk. It's fun when they go up, but if you get stubborn and you don't, stop your losses, it could be very painful.
Excellent setup. Thank you for sharing that with us. Let me throw on a few ideas on top of what Jay has said. First off, it is in the aerospace, airline, and air transportation industry, which of course hard hit by COVID. People are just thinking about maybe we can consider getting back into this. Big moves on Friday in the entire industry: Delta Airlines, SkyWest, Alaska Airlines, all of them, Boeing, all really moving higher. So of course this is part of that move. Now there's a question here that was posed on the chat, which just so perfect, so timely here. Thank you, Jara. Gordon, if the trend is bullish, would not price once price breaks the ceiling, it would retrace the ceiling and support before going up again? Yes. So why then buy the breakout on a buy stop? Why not let it break out, come back down and buy on a buy limit, right? The answer is this: 58% of the time it retraces and does what you're talking about. So slightly more than normal. You are correct that you can wait for that. The problem is that the other 42% of the time, you can divide that in half. And the one half is it's going to go a little lower, and the other half is it's never coming back. It's taken off and going up. So about 1 out of 5 times, there's a trade which will break through and just not look back. Just keep going straight up. I mean, if you're in the cryptocurrency, you've seen a few of those moves in the past couple of months. But what we're talking about here is the best trade. It just turns out that the ones that break out and keep going up, they're the ones statistically that you really want to be on board with. You do not want to miss them. And if you play the game the way you're describing, or the way I'm interpolating from you, is that if the price comes up, breaks out, and then you wait for it to come back, you will miss these trades. And those are the trades you're just going to, pound the table that you missed, that sort of thing, right? So statistically, the buy stop gets you in every single one of those trades, and 1 out of 5 of them just takes off, and that's the one you don't want to miss, right? As far as the ones that come back, well, Wayne has asking a question that applies there. He says, scale out, or can you move the stop loss higher? Do you have to watch COVID news? Those are all questions for Jay, but the scaling, that's the notion, right? If you're the kind of person that says, I just can't buy a stock unless I know I'm getting a good deal, you bargain shop, the grocery store, or whatever, that's the way you live. So if that's your world, get in with a buy stop. And then when it retraces, buy more. That is to say, divide your anticipated number of shares or capital allocation in half and say, I'm getting in. And then, oh, look, I got a better price. Now I can get the other half in, right? That'll, speak to your discount buying soul and still give you the opportunity to not miss the trade. Because Jay, I've heard so many high-end traders say this sort of thing. Worse than getting in and making a loss is missing the big opportunity. Do you share that point of view?
It's frustrating, and you're going to miss so many opportunities. You just have to focus on the ones in front of you. If as a trader, you have to have a very short memory. You can't get too high when the going is good, and when it gets rough, maybe you need to walk away, go for a walk, take a week off, and regroup and rethink the process. Because just because we have a statistical advantage in something that looks good doesn't mean it's going to work out. That's why you have to have your stop loss. And one of the criticisms, and I get it from my 16-year-old son, well, Dad, why didn't you buy it when it was down here at 35? You're buying it at 41. That doesn't make any sense. And it makes sense. I would have rather bought it at 35 and held it, but that wasn't the point of this trade. As a day trader and a momentum swing trader, I'm looking where it's distinctly moving. So there was volume in this stock. There was momentum behind it. And now I have more of a defined play where if I bought it at 35, I would hope it would hold that level when it went down there and then buy it in a neutral trend. And people do that. And that is fine too. But when you're trying to make quick trades and make money intraday or over the day or within a week, you want to look at things like this. And, right now it could easily come back down. And what I want to see is if it does, that's fine. As long as it doesn't break below, say, 41, 40 and a half, that's a very positive sign, meaning that old ceiling has become the floor. So resistance where it wouldn't go above becomes a support level, and the buyers are still in control and the momentum is still in the stock. It just isn't running like it once was.
Excellent. Jay, thank you so much for being with us today. Before you leave, if I could indulge a little bit in your time, there are people who I used to sit in an office full of traders, and I remember these guys just sitting there cursing and swearing. As a proprietary trading shop, they were just cursing and swearing. Oh, those market makers, they're hunting my stops. They're doing this, on and on. A list of beliefs they have about the evil market maker and what it does. I never found those personally to be productive because I wanted to concentrate on what I could do. On the other hand, though, people are human. A market maker is human. And although today most of the computer trading that goes on is not the market maker's touch, they were built with the market maker mentalities and the ideas in mind. So would you give us your take on what the retail trader should think about stop hunting, or I'm getting in, all of a sudden the price comes down, was it the market maker getting me? Is there a way to think productively about the people and the machines on the other side of the trade, especially for active traders?
Of course. As a market maker, and we were called specialists before that, you used to being blamed for anything that goes wrong for a trader's misfortune. Everyone wants to blame somebody else for their bad luck or mistiming of things, and that's fine. And now the speed at which things happen, and we're seeing it now with this whole GameStop news, that people are blaming the Citadels of the world and those market makers electronically that are getting in and getting out very quickly. If you get in a trade and it doesn't work out, you can blame anyone you want, but it doesn't do you any good. You have to just stick to your strategy and not worry about every little, okay, I wanted to buy it at 10 cents and now I bought it at 13 cents. Oh, the market maker, they moved the market. It's frustrating, but you want to make sure that your strategy, you're the one in charge. The new retail investor is very powerful, and you have tools that no one had before you. So just stay true to yourself. Don't look to blame somebody for the little loss here, the little loss there. Just make sure you're managing your risk. You're staying as emotion-free as possible, because emotions, and it still happens to me, get the best of you. You get frustrated when something doesn't go your way. And
so let me interject right there.
Go.
When you trade now, you're trading the market, you're coining it. When you put on the trade and all of a sudden it goes against you or whatever, are you sitting there thinking, dang, Jimmy got me, he's down there? Are you thinking that, or are you able to just say no, whatever, it's just me in the chart?
It's your money. When you lose your money, no one's happy losing money. Of course you get frustrated. It's normal. I used to have a lot of hair and I ripped it out, and I had a temper. I punched computer screen. That was childish behavior, and it didn't look good. You have to find a way of channeling it when you're having bad days, but you really have to have a plan going in and thinking those worst case scenarios. So if I buy a stock at 41 and it came in, okay, maybe I didn't, I wanted to put $2,000 into it, but I only put 1,000, because if I was wrong, I want to buy it a little cheaper, and I'm cost averaging it. If you start talking in gambling terms, saying I'm going to double down if it goes like that, that's not what you want to be doing.
It's a red flag.
This shouldn't be gambling. This should be investing. And your time frame can be short term, and it could feel like gambling because you're there, you're at the casino, if you will, which I hate that term for the stock market, but you now are invested in it. And just like you are at a casino, you get, excited when things go well, and you get upset and your stomach can turn when things don't. But know that there are going to be days where you get kicked in the gut, and there are going to be days where you lose. Learn from that process. Take notes. That's one of the most important things. Go back on your trade, and maybe you just got unlucky. These things happen. Boeing, for example, the chart is looking good, but guess what? If you held it over the weekend, there was a little accident that's causing the stock to maybe give you a buying opportunity. Who knows? That's one thing I am looking at to see, how
that's interesting. So yeah, Bob texted that in saying BA is a good example of opposite within same industry. News morning, more engine problems, some day traders perhaps going to get stopped out. You just said you're looking at that maybe as a buy, right? Mm-hmm. That's fun for me to think, okay, news comes out, it's bad, and all of a sudden here's someone else. Engine dropped into someone's garden, says Wayne. To know that you're sitting there, you're not the panicked one, you're not the reactive one. You're what's my opportunity? That's cool. Real quick, I don't want to miss this. VWAP is that an important thing? Do institutions, do market makers, do they care at all about VWAP?
Oh my God, markets change and indicators change, and I would follow Brian Shannon. If you're Twitter guys, go to
VWAP guy out
Trend. Brian Shannon, he uses VWAP trading. I use it as well. VWAP basically stands for volume weighted average price, meaning years ago people would come into IBM, and if it's under 125, I want to buy it, and they would just sit there and they would buy it. Now with electronic trading, people just want to get the average price of the day. And how do they figure out? If IBM trades 125 to 126. Is the average 125.5? Well, let's see. Where did all the volume trade? Was most of the volume at 125.10, 125.15? So the volume average will be skewed lower. And when traders execute orders on behalf of institutions, their goal isn't to just buy it at one price and be done. Their goal is to buy it over time and get the average price based on the volume. So what you see now are stocks trading in patterns along the volume weighted average price trend lines. So you can break it down to minutes, 5 minutes, 15 minutes, day trades, day patterns. There was one interesting one. There's a stock, the symbol is U, Unity Software. I don't know if you have VWAP trend lines there, Gordon. I'm giving you this on the fly. But
I can get them. No worries. Yeah. Let me.
If you go to
Unity, okay.
It's a recent IPO within the last year. If you go back to the beginning of its, so all time, if you go back daily or
IPO.
Okay,
right
now
there.
if you can put a VWAP from its first day of trading. So this would be the average volume weighted average price since its inception.
Okay.
And you're going to see
if I
something.
can get that. Shannon likes to do that.
Yeah, we were just talking. He tweeted it out Friday. So this is one I got my eye on. I have a small position in this with a stop just under the VWAP.
Okay.
And I say VWAP, it's really VWAP, but the traders just speak a different language. So that's
so I'm trying to multi-day. Oh, there it is, anchored VWAP. That's what we're after.
So you're just going to see something interesting, and this is where you make the decision as the trader. You may find these things fascinating, or it may not be for you. There's so many different technical, indicators out there. You find what's comfortable for your system. And I am playing around a lot with the VWAP trades on different time frames. Now that I've been doing this for the last 3 months at home, and just so you guys know. I used to do this professionally, and I had rules where I couldn't day trade for my own accounts. I was trading stocks like Boeing and IBM all day long, every single tick. So now it's fun to actually get to pick whatever stock I want to trade and, have fun with it. So Unity came up on my radar based on a VWAP pattern. And if you were to take the VWAP. I'm going to
look at the intraday VWAP here. I don't have the since its beginning.
Well, I can just from the beginning. Let me just tell you, it came right to its VWAP from day one. It held first time it tested it, and it started to rally. It's around 118. So 118 is the key level I'm watching, give or take a few quarters. And the VWAP came right down to that red candle. What's that?
I think I can approximate this based on what you're saying. If I can.
Yeah, sorry, I didn't mean to put you on the spot like that. It just was one that was.
I love Brian Shannon's. There we go. Anchored VWAP point of view. That the sort of theory that he has, which is great. It let's see if I can go like this and then redo. So you're talking about the VWAP making a curve, kind of like this.
Yeah, it basically tested its VWAP from inception, and it held, which is interesting. Now, there's been news in the stock; it had bad earnings. News will trump everything. So don't make it sound. I don't want it to sound like I don't follow the news in these stocks. Of course I do. I don't like to own stocks into earnings if I'm trading them. But when it's Google and PayPal and Disney, I just put them away. And if something major happens, then maybe we revisit the trade. But when I'm looking for opportunity, from a risk reward point of view, this stock using VWAP levels held a very important level. And I decided, you know what, I'm going to put a small position in there, knowing that if it breaks below, say 118, 117 and a half, I'm out. So I lose, $150, $200. But if it reverses, the stock could probably go back to 125, 130 like that. And I'd be out because I'm only looking to make, 5 to 10 points in the stock. That 130 was my goal, to get it back to that level. So,
So would you say real quick here, the stop, the amount that, let's say you put a $5 lower than your entry stop, what's typical for you? Are you looking for $5 up, 10 to 50? I mean, what's your typical risk reward setup?
Yeah, I take profits way too quickly and kick myself later for doing so, which is a great problem to have. Don't ever complain that you're making money. But the risk is to the downside, 2 points, to the upside, 10. So it's a 5-to-1 risk reward ratio. Those are the kind of setups I like.
That's your initial setup. Yeah.
It's my initial setup. Now I can change. If the stock starts to run, I may get greedy and I'll say, you know what? I'll sell half at 130 and, then I'll bring my stops up, meaning I'll protect myself. If it doesn't follow through and it goes down to 127, I'll sell it out and I'll take that loss on the 3 points because I was risking it going back and filling that gap from its earnings report and going back to 137 and a half, 140.
So some of the people on the chat here attended my class a month ago where I taught about the different setups that people take. And we came up with little character names to go with these trading profiles. If you have a risk reward, that's where, I risk a lot to make a little, then we call that a dragonfly trade, because the dragonfly is a predator that runs around and wins, makes its kills 90% of the time. On the other side of the spectrum, sounds like you're talking about risking 1 to make 5. That's where you're, 20% wins by default. Now, if you have a 50% win rate when you're setting up a 1 to 5 trade, then you're killing the market. You're doing great. But the predator that's like that is the polar bear. It's out there swiping at seals and missing most of the time. But when it gets it, it's a big whole chunk of fatty, delicious meat. So that's a big win compared to a bunch of small losses. Now, so polar bear trading is the idea that, hey, I'm making a bunch of little losses. That's my style. That's my business. I'm not worried about losing 3 and 4 times. What I'm worried about is when I win, I better be making up for all of those. I mean, do you find that that's the dynamic of your own personal trading, Trey?
I am finding that. And it's funny because I've been keeping my own statistics. And just 2 weeks ago, I was 50-50. After the week before that, I was, a 4-to-1 win ratio. But the 50-50 week, I made more money than the 4-to-1 ratio because I was having little wins. But, when you get that setup that's right, and, you take that risk, you lose. But the one that hits, if you let it run, you're gonna reap a nice benefit. So you have to find the style, because some people don't like taking any losses, and good luck to you. It's never going to happen. But you want to make sure for a day trader, swing trader, to time those entries where it's in your advantage. If you're the long-term investor, you can buy PayPal today and just put it away. You can buy Google today, put it away. And what you want to do is just add to that position slowly over time, and you should be okay. Now that I said that, PayPal will never go up again.
Yeah.
But,
hey, I want to ask you real quick. How do you find your trade ideas? Do you have a scanner? That's been asked a couple of times on the chat.
I do a top-down approach. I look at what sectors are hot, then I look at what makes up those sectors. So right now, financials are extremely hot. So then you want to look at regional banks. What are the top regional banks? What are the top, like Goldman Sachs? I own that. I worked there for a long time. That looks strong compared to the rest of the sector. So maybe I pile into that. And then honestly, don't be afraid to follow people on Twitter that share ideas. There are some smart people, and they are looking to bring people into their trading community. So maybe they have, they want you to come in so you can invest with them. But people share ideas freely on Twitter, on stock twits, and you find people that have similar setups and look for things like you normally set up, and you'll find ideas that you didn't even see. I mentioned at Alpha Trends, at All Star Charts, Trader Stewie. I don't know who he is, but
he's our guy.
His setups are phenomenal, and there are a lot of flagging patterns, which I find very interesting. So you look for people that are influencing it, and if they have the same ideas as you, it just reinforces, like, oh, okay, some other people are seeing this, and maybe this is a good trade to be in. So don't be afraid to, share ideas on Twitter. Try to find people to follow that, you can learn from and that are willing to share ideas. I think it's a phenomenal place.
Terrific. Thanks, Jay. If you wouldn't mind taking a look at the open with us here, we have I've got this chart here. I meant to get to it earlier, but Jay's, as you can tell, a lot of fun.
I'm sorry, I'm talking too much.
No, loving it. Thank you so much. Great info. So Bitcoin was the X factor that I didn't mention before. The cryptocurrencies are grabbing such attention now that we kind of have to factor them in, especially in a pre-market Monday situation. We noticed that both of the currencies I pulled up would have given hints to a bullish side, and yet the market's opening lower. What's going on? The answer is likely this. Bitcoin and all cryptocurrencies, you're looking over here on the right, nothing but red. Well, they had a great move, and we knew the sell-off was coming eventually. So this Monday, apparently, it's starting to weigh. But notice it's not this. It's not all the same. It's not like, here comes Bitcoin. What market's going to do whatever that does. No. It's the mindset. Do people want to put more money in, or do they want to back off a little? In the case of cryptocurrency, they're saying back off a little, and that's kind of bleeding over. But see, that's the great setup in my mind. Is here's people being nervous, but here's the global markets showing that they actually want to hunt for opportunities. And so what we've got here is this setup where here's the S&P 500 futures at the top on the 5-minute chart, running right into the open. What we are seeing is this sort of upward sloping, both support and resistance channels. We've got lows sloping higher and highs sloping higher. This is fabulous if you want to be a buyer, because this tells you, not that it's going up, but that it's got a little bit of a bias that way. Even the cryptocurrencies kind of had their throw up moment, coming back a little.
Those are stops. I guarantee you. Once it hit 50,000, it triggered sell stops. And as a market maker, you see this all the time. If it got through a certain threshold, there would be a washout, and we just got a washout there on that one candle.
Wow, that was big. Yeah.
Yeah,
that happened just as we were talking.
And now it's reversing, but it's funny. Bitcoin is crashing to 50,000. If you'd said that a month ago, people would be like, it's at 50,000. So it's about perspective. It's about perspective. And I do.
So now here's the futures, ES futures, S&P 500. What would you be looking at when if you're standing on the floor and you're seeing this market open, you see this sort of channel? We're a little bit closer to the downside, but we do have a candle or two coming right into these last 5 minutes. Is there anything that would jump out at you and say, oh, this is what I care about right now?
No, right now, no. I think we're at an uncertain time, and you can pull back. It's okay to pull back. You don't have to trade every single tick, every single moment. Is this finally going to be a pullback that you don't buy the dip and it corrects a little bit more? What I said earlier is look for the pockets of strength, because I'd rather trade strength than try to buy into weakness and buy a dip. Dip buying over the long term is fantastic, but as a trader, I'd rather buy it as it got a little lower than right in the middle of this channel. So, I kind of want to get more information and step back and, follow the trades that I'm in, make sure I'm managing those positions. I only have, I think, 2 or 3 positions that I carried over the weekend that I'm really interested in watching. And then, I have all my notes, and if something reaches a certain target, I have a couple buy stops in place. Something breaks out. I was looking at the, Jets. I was looking at Marriott and Hilton. The opening.
Will that travel trade carry on?
Into they're back in vogue.
Week. Yeah,
it's crazy. I mean, if you think about it fundamentally, all right, wait, there still no one's in these hotels, but they're making new highs. It doesn't make any sense, but the charts are telling me otherwise. They're anticipating big things to come once we reopen. So this is fascinating watching Bitcoin. It's just so volatile.
So this price action, because you mentioned the washout, I want to take this as a moment to sort of confirm my own personal bias. You heard me say and echo what Jay was saying about buy stop orders and why I like them. Here is the example I gave. The thing that the buy stop does is it keeps you out of the horrible trade, right? It doesn't guarantee you're going to win. It does put you in all of the big winner trades that take off and go, but it keeps you out of those few that just collapse immediately after you get in. Here's why you want to consider a buy stop instead of a buy limit. Like, if you said support is 50,000, great. I want to be in at 50,000. Here's why you don't. If a bunch of people who got in higher said, well, if it gets 50,000, I'm out, then all of those orders collect, and when they get hit, as Jay says, there's a washout. The orders fill into the system, and all of a sudden the market makers' machines. There's market makers on every asset trading class out there. They have to go looking for. They have to go looking for orders down below to jump in and grab. And match. Sorry, that was what I was looking for. And so what happens then? That rapidly falls. Well, if I'm waiting until it gets up above these most recent candles, if I'm doing that at least, then I don't get in that washout. And if it comes back on the way up and, I get back in, good chance that from this point forward, I don't have those stops weighing on me. And so I don't get caught in that riptide, so to speak. All right, quickly on the futures, what I'm seeing here is the fact that we are a little bit closer to the downside. The good side of that is if I were to get in right at the open, then I know as soon as it crosses this red line, I've got a legitimate stop loss. I want to be out. If on the other hand, it's not going to go down, but it's going to go up, I can guess that it's probably going to have up to this level here before I get any kind of serious resistance. I mean, it might go back and forth, but if it's going to go bullish, I've got that much room. Plus, if it breaks out and keeps going. So if I wanted to get in right at the open, that would be the setup I would use. In fact, speaking of, here comes the open, and let's just watch the first minute or so and see how it responds. Typically on a Monday morning, the open is slow. Wouldn't you say, Jay? It doesn't always just come roaring out of the gate. I mean, at least that's what I've noticed.
Mondays are frustrating because it takes a little while for things to flush out. A lot of news happens over the weekend, so you may see bigger than usual moves. Today we had 2 mergers, which was fun to see. We haven't had Merger Monday in a while. Goodyear bought Cooper Tire, and then there was a regional bank merger as well. So yeah, Monday, a lot of news can skew things. You see a lot of analysts upgrade and downgrade stocks. So, you may want to just take a pause, or if you have profits, take those. And then, dip your toe into the water after the first 15 minutes. Now, the one thing that has really changed over time is the first half an hour and last half an hour is where you can really see the biggest moves in the stock. That's where the most volume is. That's where the opportunities lie. So it's going to be interesting to see when we hit the top band here, which it looks like we're heading towards, what the play is. I'd be surprised if we broke out and broke above, but as a technical trader, you have to be ready to go if it does make that move. Now, today, if you look at the Dow, I don't know what Boeing is doing, but I think that's the biggest drag on it. And then you want to see what other sectors. What I like to do is I like to look at the 30 stocks and see what are the biggest gainers, the biggest losers. And sometimes you may have only 5 losers, but they're the heavily weighted stocks in that index, so it's a little skewed.
Well, that you mentioned the top 30. I have my own top 30. What I do is I go through the sector ETFs and see what are the heaviest holdings in each.
Yep.
And I create this list I call most influential. It's about 25 stocks that are basically, most of the ETF money is they're the ones steering the ship, so to speak.
Yep.
Whatever's on this list, however it's moving, I want to know about. And so I brought this up here on the screen. You see I'm just sorting it by, who's winning. And right off the top, we've got what was doing well on Friday continuing. We got Alaska Airlines, we got Chevron, we got Dow. These are, oil and airline stocks right on top. So that's interesting. Slight indication that the travel trade isn't done yet. So worth watching. I'm excited about the fact that we saw the market open. We saw the euro giving us that hint. We saw the Aussie yen also not giving it up and holding that channel, saying that, hey, maybe a little bullish. We had Bitcoin doing that little, washout right before, but right into the market open, rebounding. So in my mind, we had all of that evidence for jumping up. Did I know it was going to go up? No. But if I did feel like I wanted to make a trade, my idea was, buy it here, stop loss there, target at least the open, see if it continues. But what we're seeing is that it didn't just rocket out of the gates. And that's been my experience on a Monday morning. You just don't see the huge drop. It'll come somewhere here or drop or jump. It'll come somewhere in that first hour, but Monday morning is just a little sleepy. Everybody's kind of looking at each other. Hey, where are we going to go? Where are we going to go? So anyway, that's all we have time for today. Really fantastic having you visit. Love to have you back in the future, Jay. Sure. Any final words you want to share with somebody about they're just getting started? What's a good track
of you're just getting started? Have fun, enjoy it. It can be exciting, and if you have the right strategy and the right stomach for it, then, make sure you're just taking notes on those good days and those bad days. As a superstitious trader, if you had a good day and you had a bowl of Captain Crunch for breakfast, then you eat Captain Crunch the next day until it keeps going. You find what works for you, and and try to get interactive, get involved in some of these social media communities to absorb and listen to what other people are saying. And if you feel emboldened, share your ideas. You could get ripped apart, you could make friends. It's a great way to talk about the markets and stay involved. It's a lot of fun.
Thank you so much, Jay. We'll again look forward to having you back and seeing your insights as we go. Really, I think people really liked it here, and I think they're going to like hearing from you more. Yeah, Wayne says great stuff. Thanks, learned a lot. Excellent. Thanks, John said it was great. Look forward to next week. I want to just I had it on my chart, so I got to say it here. Thanks so much, Maya and Paul, for letting me go a little over. What I got here is Home Depot. Home Depot, Macy's, and Lowe's are the three stocks doing earnings tomorrow morning. These are on the list or at least Home Depot is on the influencer list. And what we care about is, because these trades are all kind of dialed into the retail industry, how are they going to report tomorrow morning before the market opens? How the three of them collectively report will influence what's going to happen and the way the market's going to open tomorrow. And we will be walking through how that happened next week and looking back and then what we can do about it in the weeks following. But for tomorrow, please keep an eye on the news that comes out on Home Depot, Macy's, and Lowe's. That's HDM and LOW. And then notice what happens to the market going forward from there. See, we don't really care so much about the news. We care about the market's reaction to the news. If a market comes out, if all these companies come out and said, we didn't have very good of a quarter, well, then what did everybody do? Did they just sell it away like crazy, or did they buy it up? Because that's a hint at what the sentiment, the attitude of investors are out there in general. If people like buying dips, you can bet they're going to go looking for excuses to buy dips elsewhere. If people are getting panicked from bad news, that tells you they're not going to be holding their investments, and it gives you an idea which way to sort of bias your own trading thoughts. So yeah, Jira is asking, how did I get the most influential list on TradingView? I built that myself, and I will show you next week how to do that. Thank you for asking that question. Since you're interested, I will show you how you can build your own most influential list. I update it about once every 3 months just to kind of keep it fresh. But all right, everybody, thanks for joining the first ever Charts and Chats with Gordon Scott CMT and guests. We are so grateful to Jay Wood CMT for joining us today, and we will be back again next week. Cheers, everyone.